Okay, thank you, Richard. And thank you, Grover. I call Grover G, because I just think it sounds cooler. So I encourage everyone to just address Grover as G. G. I think that's cool. Okay, now I promised Grover and Richard that I would make this interactive. So I need your help. I need your cooperation. So first of all, if you can put your phones down. Gary, put your phone down. Okay. Okay, now if you were born between January and March, I'd like you to stand up. If you were born between January and March, please stand up. I need your cooperation. I promised this to Grover and Richard. You got to help me out here. Okay, and I want you to just put your hands like this, like you're molding some clay or something, just like this. That's it. Okay. Yeah, you don't have to move them around, but just hold it. Just bear with me, okay? And if you were born between April and June, could you stand up? April and June, please stand up. Okay, you guys have it easy. Just put your hands together, just like that. That's it, that's it. And just hold it like that. The January to March people, just patience, thank you. Okay, if you were born, what's next? From July to September. Okay, now I think you guys get the idea. Please stand up. Okay, I just want you to just put one hand in the air. Just put one hand in the air. That's it. Now hold it. I know it's awkward, but just hold it. Okay, and for those born between October and December, could you please stand up? Okay, now if anyone is still sitting, we have an issue. Okay. Now for all of the October to December, just put both hands up like that. Okay, hold that. Hold it. Hold it. Okay, hold it. There we go. Now I can tell my wife I got a standing ovation. Thank you. Okay, so Grover asked me to talk about next generation banking technology, blockchain, artificial intelligence, IoT, and other emerging, I don't know what these other emerging technologies are, and other emerging technologies. So 2 observations right off the bat. Blockchain, Internet of Things, artificial intelligence, these are not emerging technologies. They've already emerged. And my second observation is the emerging technologies of today are tomorrow's legacy technologies. Right? So everyone's solving the problem of the mainframes today. Well, 10 years, 20 years from now, we're going to be solving the problems of blockchain and IoT and AI. So I think it's important that we consider emerging technologies in a historical context. We have to introduce the dimension of time. And I think what I'd like to try to do is make this as dead simple as possible and just go right back to first principles. All right. So if we go back 1,000 years, this is how we did stuff. Okay, this is how we did stuff. We took stuff, or if it was non-physical, maybe we wanted to know how much yield we're going to get from our crop. We took some data. We mechanically applied some rules. So maybe we counted the number of grains on a plant, and then we counted the number of plants in a square yard, and then we multiplied that by the area of the field, and we got an answer. And the application of the rules was done in real time by humans. And that's why, for most of human history, production went exactly with population. If you wanted to get more stuff done, you needed more people. And I find it remarkable that a lot of the managers in our organizations today still think this way. I need you to do more, hire me more people. During this period, this is actually when modern banking was born. In the 1400s, the Medicis were providing banking services to kings, to very rich merchants. The term bank actually comes from the Italian word banca. That's the bench that the bankers would sit on. in the marketplace. And even then, they were innovating. In Christian Europe, you couldn't charge interest. It was actually against the rules of the Catholic Church. And so the bankers innovated. If they gave you a loan, you didn't have to pay interest, but you had to pay insurance on the future payments that you had to make. And these insurance premiums, ironically, exactly equaled what the interest payments would be. These premiums actually came to be known as the Pope's interest. And then the Industrial Revolution happened in the 18th century. But what's interesting is the way we did work actually didn't change. The paradigm of how we did work did not change. We still took data. We mechanically applied some rules to get an answer. The only difference was we now had machines. And whether it was a steam engine or something driven by electricity, these machines now assisted human beings to get the task done. And this is why, for the first time in history, production started to surpass the population. And the increase in production was exponential. And it was exponential because the machines were getting more and more efficient. This looks kind of like a straight line, but it's actually an exponential line because the scale on the left-hand side is logarithmic. Okay, so the machines were getting exponentially more efficient. Essentially, the cost to use the machines were coming down, and human beings and society became much more productive. And this innovation made its way into banking. This picture is actually from the early 1900s. It's from the Banque Nationale de Commerce et d'Industrie. This is the precursor of BNP, got it backwards, little dyslexic, BNP. And the revolution here was the bank back office. If we separated the administrative functions from the commercial functions, the bank could continue to grow even in uncertain economic times, and that's exactly what happens. And it's also remarkable that even today, banks in the Philippines are talking about the problem or the opportunity in their back office. The mechanization also led to the discovery of branch banking. It was early in the 20th century that A.P. Giannini and the Bank of Italy opened up over 400 branches in California. This ultimately became what we know today as the Bank of America. And so two things are interesting. Of course, today, banks in the Philippines are still talking about their branches. They're still talking about branch banking. But I think what's even more interesting for me is that all of this was achieved with the same paradigm of getting work done that existed for thousands of years, albeit assisted by machines. Okay. And then after the Second World War, we actually had, for the first time in a long time, a truly paradigm shift in how we do work. We don't even think about it like this, but I tried to break it down to first principles. We had a paradigm shift in how we do work. Instead of taking data and mechanically applying rules to get an answer, we took data, and because we now had computers and integrated circuits and stored memory, we took data and the rules and we fed it into the machine before we did the task. And what that allowed us to do is it allowed us to run the rules consistently and repeatedly and on demand. And for the first time in history, we could fully automate our work. And it seems very simple. It seems very simple, but by being able to feed the rules in ahead of time, this is a paradigm shift in how we do work. And we all know of this as the information age or the computer revolution. And I'm running out of room on the chart because things are happening faster and faster. The Industrial Revolution was maybe 200 years. In the last 60 years, productivity, because of this change, this paradigm, this change in how we do work, has absolutely exploded. And we know why this is happening. Just like the machines, the computers are getting faster. The cost to do a computation has come down, and this is known as Moore's Law. So with computers, and then the ability to connect computers, the internet was born, and so was digital banking. Union Bank of the Philippines, of course I'm biased, but Union Bank of the Philippines provided a digital-only banking experience through Eon as early as 1999. And it's remarkable that a lot of banks in the Philippines today are still talking about how they get online and offer a mobile banking experience. The technology has increased to the point where we now have digital cryptography. We have innovated on the double entry ledger system such that we don't just have digital ledgers, but we actually have decentralized and ledgers that are shared between strangers. And this has allowed for things like a completely decentralized digital currency. This is like Bitcoin. And it's also led to completely decentralized finance or DeFi. But one of the things that this also allows for is a central bank-backed stablecoin or digital currency. Has anyone ever wondered why you can only transfer 50,000 pesos on InstaPay? Has anyone ever wondered that? Okay, the reason why you can only transfer 50,000 pesos on InstaPay is because it clears in real time, so it feels real time, but it doesn't settle in real time. There's a settlement delay, and therefore a settlement risk, and that risk is mitigated by capping the amount that can be transferred in a single transaction. So while we'll continue to use InstaPay, the technology to settle in real time via a central bank sponsored digital currency or a stablecoin already exists today. So, digital currency, blockchain, decentralized finance, you've got to ask, do you even need a bank? Do you even need a bank? Bill Gates, everyone knows who Bill Gates is, right? Ex-CEO of Manulife, of Microsoft. Yeah, so you cursed me, Richard. I mean, he once said, famously, he said, banking is necessary, but banks are not. And he said this in 1994. The other day, I was in Japan. We had a long weekend. I don't know what it was last week. There was a lot of holidays. So I took advantage of that, as many people in Manila and the Philippines do. I went away to Japan. On my way back home at Narita Airport, I picked up this flyer from Anna. This is a complete mobile banking application. The airline is the bank. The airline is essentially the bank. And at UBX, we've taken this forward. We believe it's not just airlines. Any business, no matter how small, even if they previously didn't have a bank account, can now be the bank. And today, thousands of small businesses around the Philippines using the UBX Open Finance platform are in fact providing basic banking utility to the communities they serve, often communities that never even had a local bank. So for UBX, the future is digital, open, embedded, and decentralized. But wait, there's more. This paradigm shift in how we do work, the digitization of work, it uses data, but it also has a very interesting byproduct. It creates a lot of data. This is my same watch in the picture. I'm at the gym. It's collecting all kinds of information without me even thinking about it. This information is very valuable to banks and financial service providers. An insurance company could use the regularity of my workouts or my heart rate here to assess if I'm a good risk. A bank might even use this for credit risk. If I go to the gym regularly, maybe I pay my loans and my credit card regularly. Today, in the world, 2.5 quintillion. And if you ask me how big that is, I don't know. But it's quintillion. It must have a lot of zeros. Okay, 2.5 quintillion bytes of data are created every day. And then, only very recently, we have, for the first time in decades, we have had a true paradigm shift in how we do work. Instead of taking data and rules into the machine to get an answer, we can now take data and the answers, and we can feed them into the machine to get the rules. And this is profound, and I hope if you take one thing away from this talk today, because this, just like Grover alluded to maybe the ominous impact of this, I'm going to speak about this a little bit more optimistically. But if you only take one thing away today, this is profound, and I hope you think about it. The issue is our minds are still thinking the old way. So we expect that the answers that come out of the machine are correct because they're based on rules. But under this new paradigm, there is no rule. There's no rules going in. It's kind of like driving in Manila. There's no rules. Okay? But the data and the answers go in and out come rules. So we shouldn't be surprised by fake news. We shouldn't be surprised by bias and potential discrimination in our rules or our models that come out of this. We shouldn't be surprised by tricky transparency. And if we appreciate that, I think we're okay. Now, some countries are alarmed by this, and so now they're running to create regulation, AI regulation. And I worry about this because all I think it does is create a false sense of security that somehow the paradigm of doing work is still what it was before. We can count on the rules, but it's not like that anymore. And while there are potential inaccuracies and bias and fake news and all of those things, the payoff of this new paradigm is not just profound, the payoff is massive. And it's massive because most things that matter, we don't know the rules ahead of time. And if we can uncover those rules, we can reach more. So we have 2.5 quintillion bytes of data that's created every day. And we have this new way of using that data to uncover rules and massively push productivity forward. How much of that 2.5 quintillion bytes of data are used under this new paradigm today with machine learning and AI? Less than 1%. Less than 1%. So where is this going? The honest answer is we don't know. So when we talk about next generation banking technology, we actually don't know. But I think we can count on two things. The increase in productivity is going to be exponential and massive, and it's going to happen faster than ever before. At UBX, we're already using this new paradigm to extend credit to businesses and individuals that don't even have a bank account. So this new paradigm promises to unlock opportunity and access for more people than ever before, but we have to use more than 1% of the data that's being created. And now we have ChatGPT. Does anyone know how ChatGPT works? It's really simple. All it does is predict the next word. That's all it really does. But it goes to show that a very simple mechanism, scaled sufficiently, starts to look like magic. Now, the cost of running ChatGPT, these are billion-dollar models. It's really expensive to run these things. And the model parameters are only getting bigger. There's only more of them. But I'll close on this. I think I'll make, again, 2 observations in closing. Number 1, history has only taught us that the cost will come down. And with generative AI, which is what ChatGPT is, it is suggesting that there are laws of things as fundamental as language and thought that exist, but we just don't know how to explicitly state them. But if we can get close to explicitly stating the rules of language, thought, image, audio, the cost reduction and the corresponding productivity gain that generative AI is uncovering will be absolutely, absolutely massive. So, how did I want to end this? If the AI uncovers the rules, what that means is that the AI will use computers and other AIs just like humans do. We're starting to see this with the autonomous agents, and this double whammy effect promises to deliver perhaps the next epoch of productivity gains. So what does next generation banking look like? Again, we don't know. But if you consider how fast this is moving and how much more productivity is being delivered, it will likely look like nothing we have seen before. Now we can guess, but whatever we guess is going to be based on our old way of thinking. And it's probably going to look a little bit like what we're already doing, and we're not truly unlocking the potential. In fact, if we just guess, we're going to have another kind of AI, what I call attenuated innovation versus the explosive innovation that we need. So I'll leave you with a thought about the potential that we can now imagine with this yet to be defined next generation banking technology. And I'll put it in the form of a question that we often ask at UBX. What will it look like when all 115 million Filipinos are connected without any barrier to the global economy? Thank you.